Welcome back. Counting down to the last half hour of trade, we've got Sudip Bandyopadhyay also joining us on the show this afternoon. Sudip, should we kickstart with those M&M earnings? Because 97% dip coming in on profit. Otherwise, of course, we're looking forward. We're looking at the rural revival, positive commentary, still waiting to hear from the management, of course. But just to get a quick take from you, post the numbers and the miss on estimates.
I think, there were multiple expectations building, but I think we were pretty clear that, look, the first quarter of this fiscal, April, May were lost months. It's only June when things started picking up. And for a company like M&M, which is in multiple segments other than even tractor, we all know that tractor has started doing well and should do well, considering that the rural and agri-economy is doing well. But under the circumstances, I think Q1 expectations were a bit unrealistic. So I would say that even the disappointment is a bit unrealistic here. If you compare M&M vis-a-vis other peers, the way the businesses are moving, the way their M&M is moving, I think I'm reasonably confident that at current level, M&M is definitely looking attractive. Of course, this factors in the fact that economy will start recovering and we will cross this pandemic issue sooner than later.
Managing Director and Chief Executive Officer, Dr. Pavan Goenka. The Deputy Managing Director and Group Chief Financial Officer, Dr. Anish Shah. The Executive Director of the Auto and Farm Sectors, Mr. Rajesh Jejurikar. Non-Executive, Non-Independent Director, Mr. C.P. Gurnani. All the directors of your company are present at the meeting through video conferencing. Mr. Jameel Khatri, Partner, BSR & Company LLP, the Statutory Auditors, Mr. Sachin Bhagwat, the Secretarial Auditor, and Mr. Dushyant Dave from Messrs. DC Dave & Company, the Cost Auditor, are also present at the meeting.
We'll cut across once we hear from Anand Mahindra, or for that matter, Dr. Pavan Goenka in just minutes from now. But Sudip, what is the right or correct way right now in the market, given the appreciation that we've already seen in some of the stock prices, to play this entire rural theme? Is it going to be via automotives, tractor being the main play here? Would you buy further into an M&M or an Escorts, or do you think staples is the go-to choice when you need to, or rather want to play the rural versus urban recovery theme?
You ask me what should I be playing as far as rural is concerned. There are a couple of things which I will point out. One is the entire this fertilizer space. I think somehow we have not really paid too much of attention on that. There were reasons, valid reasons, but I think some of the fertilizer companies at current levels are looking really good. Let's take a case of a Coromandel International. I think it's a good company, well-managed company, and considering the hinterland which they serve, I think there is significant potential. The rain has been plentiful in that area, and the product basket which they have will definitely show significant promise going forward. So Coromandel International and some of the other fertilizer companies can be looked at. The second theme which I will request the investors to focus on is consumer durables. And particularly consumer durables which are of reasonable value, low value, and companies having excellent rural distribution network for the durables. So a Bajaj Electricals may be worth looking at. A Voltas, because of its smaller air conditioning units and refrigerators, may be worth looking at. So these are the themes which I like to play, because not because consumer staples are bad, or not because agrochemicals are bad, but the sheer fact that consumer staples as well as agrochemicals have moved up quite a bit, and probably if you compare valuation wise, the fertilizer and consumer durable, some of the consumer durable companies do look interesting at this stage.
choice of names. CK, not a Havells, but a Bajaj Electricals perhaps. What is the price pattern telling you? Where is there opportunity to buy into consumer durables as a segment if one wants to?
Well, I think if you look at Bajaj Electricals versus Havells, then any day, it would have to be Havells, which is, which would qualify for a buy, because of sheerly the liquidity factor and the fact that Havells is also in the future. But if you were to take up Bajaj Electricals by itself, I would think the stock is kind of building up on the charts, has not really flashed any particular signals, and it's actually biding its time. It's not become weak, but then it's not strong either. So I would say wait for some strength to be seen, which I would believe will come only when the stock were to move past something like 450. In the past, there have been several occasions when this 450 level has acted as a supply zone. So my sense here would be that the stock only becomes a buy with a show of strength, with a determined push past 450. Until then, it might continue to range in these levels.
Names like Honeywell, which are having a good run. You've also got Delta, Tube Investments, KEI, Adani Transmission, Karur Vysya Bank, and SRF that are rather active within the broader universe. So they wanted to get in your take. We've seen a pretty spectacular run in some of these specialty chemical stocks. Wanted to understand if you think that there's more merit within this play, and how are you even looking at themes like the agri space or fertilizer stocks. We had an interesting discussion this morning with Gautam Shah, who said that there is a lot of action and opportunity and money to be made within some of these spaces too.
I just talked about fertilizer, and I strongly believe that there is significant opportunity in Indian fertilizers at this stage, just because of the fact that somehow we have not really paid too much of attention, and relatively they are not definitely fully valued at this stage. So Coromandel International I talked about, and some of the other fertilizer companies can be looked at. As far as agrochemicals is concerned, I've been bullish on agrochemicals for the last close to a year, and I believe the sky is the limit as far as well-managed Indian chemical, specialty chemical and agrochemical companies are concerned. And SRF, of course, you mentioned, and they came out with a spectacular set of numbers. More than the numbers, I would say the confidence of the management was very apparent. Also, the market is excited because they are one company which is getting into the capex mode now, and that shows the confidence and the kind of order book or the potentials they are expecting. So definitely SRF does look good and has moved up quite a bit over the last 1 year. Even today it is up significantly. One can also look at Aarti Industries. It has moved up again, but still it looks very good at current levels. One can look at Deepak Nitrite. So I think a whole lot of agro and specialty chemical companies do look definitely very good. Remember, one is there is a significant supply chain realignment which is happening, and many global manufacturers are bringing in these Indian suppliers into their supply chain network, and that is benefiting established Indian companies. The second is obviously the Chinese companies are kind of at a disadvantage today while grabbing new business, and that's also giving Indian companies big advantage. So I think these two things are playing together, making them more attractive. And some of these companies definitely will get again re-rated in the near future.
Sudip, where do you stand when it comes to those multiplex or exhibition stocks? Because even when we do see things open, which perhaps is a long way off, there will still be concerns with social distancing norms, etc. The problem of content supply. A lot of exhibition houses are now looking, or production houses rather, are looking to go via the digital route as well. Or do you think when things do recover, there will be a strong demand and things will resume normalcy, perhaps faster than one had expected?
Well, Aman, I'm skeptical about this spaces, whether it's an exhibition, Inox or PVR, or the airline industry. These are industries which are really badly affected due to the COVID-19 crisis. And there are multiple expectations building around them, and some of these expectations are getting factored in the market price movements already. But believe me, I think recovery is some distance away for these players. And I don't want to recommend these stocks to an investor. For a trader, maybe they can take opportunities on an intraday basis and make money. But for an investor, whether it's an airline stock or an exhibition stock, it's a strict no-no at this stage.
Okay, on the pharma numbers, Sudip, let me get your thoughts. Lupin was a miss, watching out for Cipla. We've had, a DRL as well, and I'll get to some of the move on the other names. But from earnings, firstly, any takeaways, anything that you've sort of looked at?
Lupin numbers were a disappointment, definitely. And in fact, in the pharma space, if you have to say the big disappointment, that has been Lupin. Of course, one has to factor in the reality that the company has been undergoing a lot of internal restructuring, as well as they have been kind of expanding their production base. All this does have a impact for some time when they are in the midst of these activities. But having said that, I think I'll not go for a Lupin at this stage. If I have to buy a large pharma company, probably I'll stick to Sun Pharma. Dr. Reddy is excellent, but it has moved up quite a bit. So if I have to buy, I'll buy Sun Pharma. On the other hand, if I have to look for some of the other smaller names, based on the performance, I think Granules look excellent, and there's no harm in buying Granules at this stage. Other companies which I like to talk about is definitely Aurobindo. I think it's trying to do all the right things. The Sandoz acquisition hasn't worked out and has been dropped. Also, their product basket now, as far as Europe and the other continents are concerned, is pretty balanced. And it's available at a reasonable valuation compared to some of the peers. And one can look at buying into Aurobindo as well at current levels.
Okay, so that's a good mix there of on the pharma names as well. We've seen a good move on Torrent this week, just to mention, but that's definitely been one that's also stood out on the charts. What about some of the other names that we've been tracking with the move that we've seen across broader markets? It's been an interesting week, Sudip. So Tata Consumer today, for example, is still up 7%, and SRF is up 7%. Paint stocks are also looking good today, as CK was also highlighting earlier. Any new themes that you feel perhaps could now have more potential?
One stock I will like to talk about based on performance, Imami. I think it came up with results which were better than what most people were expecting. And if you look at the valuation-wise, it's putting at a much reasonable valuation compared to its peers. So that's one stock which has come in our radar recently. As far as themes are concerned, apart from fertilizer, which I talked about, one other theme which we are liking is obviously the IT and the mid-cap IT in particular. Large-cap IT we have talked about quite a bit. Of course, Infosys, TCS, and HCL Tech in particular does look very good. But if you leave aside the large cap IT, I think there is significant opportunity now, which is visible in mid cap IT. And let's say Emphasis looks very good. A lot of other IT companies in the mid cap space are looking good, particularly the ones which are pursuing a digital strategy and have significant digital capabilities. Persistent came up with a fantastic set of numbers. So whole lot of mid-cap IT companies are looking good, and they definitely deserve a relook. One thing we have to remember as far as IT is concerned, one is this digital theme which is going to play, and it's going to play out much, much more than what was expected due to the pandemic, and that's going to play out across the world. The second theme which is happening is consolidation of vendors at at multiple levels. And this consolidation of vendor is helping Indian IT companies. And this is the I think primary reason why we have seen the body language of Indian IT entrepreneurs as well as managers have completely changed between when they declared the Q4 results last year and Q1 results this year. Q1 result, their body language is very, very confident. I think that needs to be read into, and accordingly, investor needs to position themselves. Also, remember, in an uncertain time, technology is a good bet, and that's proven time and again. When there is a currency volatility, again, IT is a good bet. So IT should be a part of your portfolio at current juncture.